Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canetti and I'm here to share with you a quick review of the end of the week. First week of February, today is Friday, 2nd of February. If you see this video, I'm gonna give to you a quick review of what happens for the last 5 days, 6-7 days, because we're gonna start also reviewing certain events during the past weekend, causing again concerns, volatility in certain markets, particularly in commodity markets. But I'm gonna go with following my notes one by one, sharing with you sources of these comments, this information. And also, please do not forget that every single morning I'm posting here comments with a summary of what happens in the last 24 hours related with the market, affecting commodity, currencies, fixed income, what are we missing, equity and crypto. So you can find here a global macro report of what is going on in the world, including geopolitical events. You got the whole week here. And also, let me see what it is. If you want to receive my newsletter completely free, please let me know. And I'm happy to include you on my newsletter. What is my newsletter? It's here. You got my email here. So if you send me an email requesting to be part of the newsletter, I'm gonna add you on my newsletter and you can receive freshly, quickly, like a fresh bread in the mornings. So you can receive also my fresh market snacks every morning to take a quick look. I promise you, whatever you read, it's gonna be at least 95% of whatever happens is gonna be mentioned there, the most important ones, okay? So you don't need to read 100 blogs. You can just go and read the newsletter or go and read ATFX Connect blog, because I'm posting there also the last news. Now, going to the point, what happens during the last, let me open the charts here. What happens during the last week on the market? Well, I don't know. We should start from the last few hours, because we got the NFP data, non-farm payrolls from the United States, and actually cause some movements on the market. But I would like to start sharing with you, first of all, how we start the week. We start the week on last Monday with certain events. From Saturday to Sunday, it was an attack caused by on the border of between Jordania and Syria that caused the death of 3 soldiers. And based on that, the administration of Joe Biden, mainly many congressmen, were asking him on Twitter during the Sunday night. It was many comments from politicians in the United States asking a punishment and military actions against Iran. Because as you can see, those ones who attacked the US soldiers on Syrian territory, because it was not clear if it was in Jordania or in Syria, the government from Jordania say it was actually out of the borders of Jordania. Anyways, the case, it was 3 soldiers were dead, 25 were injured by the attack, by drone attack, and therefore it was asking immediate action, military action from the United States, with could cost, as we know already, could cost uncertain events or effects on, particularly on the energy market, which is here. Okay, we're gonna take a look later to the charts. So that was the one of the main news as we start the week, so which is not good at all. Actually, Kirby, the Secretary of State of United States, right, the Secretary of the White House, he was saying, we don't want to escalate the conflict. He actually mentioned that we are facing the worst moments, the most dangerous moments in the Middle East since 1973. And he said, but we must do what we must do. We have to do what we must do, which is war, and war, as always. Now, B, what is the next news? It was the Houthis attack, that it was actually reaching one, what it is, this one. It was actually reaching one boat, one of these massive boats. Trafigura was the name of the company, and it was on fire for hours during the weekend. And after all, they managed to end the fire. I mean, to control the fire and so on. But the thing is, after these attacks, it seems to be pretty clear that they cannot control that area, not so far, at least not at the moment. Red Sea seems to be dangerous, and still, because of that, particularly, we mentioned in the previous reports certain companies, worldwide companies, that actually are changing the roads of exportation because of this. So it's actually still causing troubles, disruptions, even by the what was the name? One of the companies that is researching on trade and stability on Middle East was mentioned that this is even worse than the COVID disruptions on trade flow. The next news, it was actually caused by UNRWA, which it was the sanctions request by Israel and followed by many other countries against this United Nations agency that it was bringing support, food, education, healthcare and so on to Palestine, because the Israel government mentioned that this United Nations association was actually part of the members was actually part of the ones who attacked Israel on 7th of October, part of Hamas, blah, blah, blah. Some of them, I mean, some journalists, even one of the speakers from United Nations say that they believe this is just the reply that or payback that Israel is playing through the international court, penal international court, accepting the case that South Africa was presenting against Israel for genocide, and Israel lawyer was actually saying that it was not a genocide, but it ends up that international court was accepting the case, and therefore like 24 hours later Israel said that okay, United Nations, this organization is related with Hamas, and then therefore it should not be funded. And many countries, Italy, a few countries in Europe actually announced that they cut immediately the funds for this company, which from another perspective, some people say that it's even worse because this was the only one who was generating certain support for these companies. Now, the last geopolitical news I want to mention to you, and we go to the charts and the market. Hungary was actually, this was a very interesting news published initially by Financial Times. This week, it was the week that European Union was negotiating to approve or not the budget for Ukraine. As you know, from United States perspective, for example, the budget from Biden administration was blocked by Republicans in the Congress, and therefore Europe is the only one who is actually discussed about the funds to Ukrainian war, which is 15,000 million. So keep in mind that this factor is super important. Why? Because if this war is not ending yet, or if at the end Russia is winning this war, it means that Europe right now is completely alone against Russia in this war. It's Europe the only one who is keep funding the war. United States make a pause because Republican Party is not supporting the expenditure on this war anymore, or not so far. So based on that, Financial Times was published. European Union could hit Hungary's economy if it does not support aid packets for Ukraine. It's incredible. European Union is actually punished one of the members just because he's voting against certain decisions. And in this case, it was Hungary President, Mr. Orban, the one who was saying, this is insane. We got many problems. Europe is actually involved in a recession right now. Numbers in Germany are so bad. One of the numbers we have seen this week, it was the PMI, the index on manufacturing and production, is dropping. Is in some cases at 43 in the case of France, for example. Super bad numbers for Germany, for France, and for the rest of the countries. Most of them, all of them, below 50 in manufacturing. Some of them little bit close to 50 or above 50 in terms of service. But in general terms, macroeconomically speaking, Europe is in troubles. And again, Mr. Orban was saying, what we doing, selling, what in the earth we will send 50,000 millions to this war if we really need them here. On the other hand, he was also pushing to get unblock one of the 10,000 millions credit line from European Union, European funds for his country, which is understandable because it's the interest of your country, what you're supposed to defend, not the interest of someone else. And yeah, I say it was the last geopolitical news, but it's actually not. This is the last geopolitical news. It's a terrific news. And terrific in a bad way. Sounds like a kind of science fiction movie. Russia was suggesting the idea or the option, the possibility after the meeting they got it on Wednesday with the Minister of Defense of Cuba, the option or possibility to mobilize nuclear weapons to Cuba again. You got the details here. It was this gentleman here who was suggesting move Alexei Turavlev, Vice President of Committee of Defense of Duma, the parliament in Russia. He was suggesting that they could move nuclear weapons to friendly countries like Cuba, Nicaragua, Venezuela, as a response of saying everything of the movement from Washington suggesting to deploy nuclear weapons in United Kingdom, right? And actually, the Minister of Defense of United Kingdom was mentioned a few days ago to all citizens in United Kingdom, get ready for a war with Russia in the coming years. The war is getting crazy. They try to polarize everything, and it seems to be a few, like always, few ones on the top are trying to push us to a war, okay? So you might need to be smart and do not fall on this. And now, going to the market. It was something else I want to mention to you was actually the New York Community Bank. It was dropping massively on Wednesday night, as you can see here. It was a massive drop. It was causing also many speculations about the health of the regional banking sector in US. After all, it wasn't that bad. I mean, they recovered part of the volume. It was just a kind of panic moment. They basically published losses of 11%, and the regional ETF KRE of bank sector, the regional ETF for the sector, it was dropping that day by 3.1%. So some concerns, but after all, nothing really dramatic. Thanks of all. So this is the situation right now. And now let's take a look to the markets, because we got today, it was actually, as I say, we got the non-farm payrolls. It was super good numbers. The unemployment rate was dropping from to 3.7, if I'm not wrong, with an expectation of 3.8. So still, they don't understand how, but still the market is working really well. 3.7, it was the last unemployment rate published for the previous month, and the expectation was an increase of 0.1% unemployment rate. It was 3.7. The market was scared by these numbers because it's not just the unemployment rate, also the non-farm payrolls was boom, massive. 353,000 compared with 187,000 expected. Where is these numbers coming from? Nobody knows clearly. It's also the suggestion, or one of the possibilities is maybe it's caused by the massive increase on the public expenditure by United States, which is just creating jobs, spending more and more money. If you take a look at the deficit of the United States, is massive. It's new records, but they keep increasing debt ceiling over and over and over again. So that's the situation. Now, ending with the market, we can see, let's go to SP 500, that the reaction of the market wasn't so bad after all. We got the spot, breaking up even 4,900 points. We got the future also breaking up new maximums, 4,979 points. On the other hand, it was good, but for a while it was dropping, as you can see here. That drop on the price was touching 55 moving average period and pushing up again. European market was dropping after those numbers, and it's causing again a new figure that is not so nice. If you take a look on this chart, you maybe think that is super bullish chart and everything is positive here and it breaking new maximums. But I would like to share with you another view on this chart, which is this one. Take a look on a long-term chart since 2009 on DAX 40, and you will see that maybe if the things are going well, maybe it's also approaching to 18,000 points, another 1,000 points up. But in my eyes, it seems to sooner or later the correction gonna be by far longer than the movements that remain to come. Okay, so just keep that, because this is one of the most nice charts I did this week, and I saw on social networks too. Okay. What else? Let's take a look on dollar index, because the dollar index was responding really well also to the labor data. Take a look on the movement on the dollar, rising and breaking up again this neckline, which probably will move the price to 104.50 points. And in that case, obviously, euro dollar is dropping. And because of this, the US economy is growing. And just as a reminder, the GDP growth for Q4 published last week, it was expecting to be 2% and it was ending to be 3.3%. All right. So it means like US economy is rising faster and stronger than expected. Labor market is stronger than expected. Unemployment rate is lower than expected and still below by about 4%, below 4%, which means like it's really good numbers from a macroeconomical perspective, and therefore US economy is strong enough to hold this. The reaction of the market is a strong dollar and drop in euro dollar. Why? Because the one that is not strong is European Union. The one who is presenting really bad numbers, macroeconomical view talking, it's European Union, and therefore the money is moving from euro to dollar, and therefore euro-dollar relation is bearish, and how's the charts actually showing. And it's something I had been repeating to you for the last 3-4 weeks, and I think sooner or later in long term we will see that you cannot defeat the numbers, which is this, okay, obviously speaking. What else? We need to take a look to the gold, because obviously with the dollar strong like that and pushing up, gold is getting colder and is getting softer, and you can see that it's actually retracement to certain levels. And we also got a long-term chart for gold. Let me take a look, and here you go. So we can see that if the gold is dropping below 2,000 points, $2,000, sorry, or $2,030 per ounce, we could expect certain movements, even the price moving to $1,850. And in that context, obviously, the US economy is supposed to go super well. Soft landing is gone already. The economy is growing. Everything is doing happy days. Let's buy US stocks, and that's the thing. This is the battle between dollar, gold, and US stocks. In terms of energy, oil is dropping again. It was getting close to $82, $83 per barrel, and it's again dropping. So in my eyes, one of the options I mentioned to you is like everything between 75, 72 and $68 per barrel probably is areas of new buys, because as you can see on this chart, for the last more than 20 years, we can see that the market has been about $68 per barrel or below. So right now we're super close to a pivot point area that's gonna define the next probably 5-10 years on the market, at least 5 years of the market. So if we grab the oil in these levels, maybe in 1 year or 2 years we are again on levels around $100, $110 per barrel. The reason why the oil is so low is first of all, maybe the global demand is dropping. We have seen numbers from India that they are buying less oil. We also have seen certain numbers from China and from Russia exporting less and stuff like that. So maybe the demand is dropping. Secondly, is US elections this year. So therefore they probably want to keep the oil flat, soft, low, no surprises. They don't want to get the people upset, making queues to buy gasoline and stuff like that. So that's why probably they're trying to keep artificially this calm, using probably the connections with Saudi Arabia, the United States got it. Okay, my friends, I think this is all. If you like this content, remember, contact me through the email if you want to be part of the newsletter, and also if you want to suggest me any kind of topic for the videos. And if you are not, please subscribe to our channel and give me a thumb up and a like if you like this content. Thank you so much. Take care. See you in the next ones. Bye bye.